Welcome everyone to this DCO Space panel discussion on blockchain and taxation. We have exactly 1 hour for the session today, actually 56 minutes if I'm going to be exact. There will be time for questions at the end of the session today, but if you want to submit a question, there is a Q&A box at the bottom right of your screen. Please feel free to type in and we'll try and make sure that we have time at the end of the session today to cover that off. My name is Alexander, and I am a director at Fanoa, a tax tech company that has developed an automation and compliance solution that helps online-first companies streamline the indirect tax transactional chain so that they can scale in a digital, borderless economy. And before joining Fanoa, I was the head of tax tech at a prominent global ride-sharing and food delivery platform headquartered across over in the United States. And today I'm honored and excited to act as a moderator for the session on blockchain and taxation hosted by the Digital Cooperation Organization, the DCO. And this is the second session in the virtual event series from the DCO, which is a global multilateral body working towards a world in which every country, business, and person has a fair opportunity to prosper in the digital economy. And this is because while growth of the digital economy has certainly changed lives and it's indeed transformed entire industries, digital transformation has not benefited every country equally, and the DCO is working to change this. It aims to enable this digital prosperity for all by accelerating the inclusive growth of the digital economy. And it brings together governments, private sector, international organizations, NGOs, civil society to enable a more inclusive digital transformation and the growth of digital industries. And today I am joined by two exceptional panelists that you can see on your screen, Manel Bondi and Sunny Milani. Manel is the Digital Taxation Director for the DCO. She's an expert in international taxation and is the international tax affiliate of the Chartered Institute of Taxation in the UK, the CIOT. She's the holder of the Advanced Diploma in International Taxation, supervised by CIOT, as well as the Executive Program in Transfer Pricing, the EPTP, a certificate delivered by the Tax Policy Center of the University of Lausanne. And she's also the Executive Comparative Tax Policy Administration, a CompTax certificate holder, which is delivered by the Harvard Kennedy School of the United States. Manel, you're also a lecturer and deliver courses on international taxation to postgraduate students, and I feel that I should be rolling up into those courses as well. Sunny, you are an expert in transfer pricing, a professional and tax technology evangelist after spending more than a decade with the Big Four, where you and your team deliver transfer pricing, international tax, and BEPS advisory services to multinational clients. You are now part of IBIDIA. It's a transfer pricing technology startup. You lead the APAC region at IBIDIA, and you're responsible for the development of establishing strategic partnerships and collaboration, marketing, and SaaS and product management.
Absolutely.
Together, Sunny and Manel, for those who don't know, Sunny and Manel have recently co-authored a white paper that was published by the DCO entitled Blockchain Technology and its Potential Application for Tax. And while many of us have heard about blockchain, I assume that today we may also have those who are not as well versed, and we might have quite a broad audience that's dialing in today. So perhaps it's going to be a good idea to, before we get into the meat of things, it's good that we start things off a little bit easier. And Sunny, I wondered if you could set the scene and help us understand what on earth is blockchain? Why is it such a great technology, or is it a great technology? Isn't it just a database? Is it a ledger? How is it applied outside of taxation? I'm just going to snowball you with questions here, but if you could help us set the scene, that would be great.
Sure. I think that's a great question to start the session. And am I audible? Is it clearly audible? Yeah,
Absolutely, yeah.
All right. So, yeah, that's a good point to start because there are a lot of misconception about blockchain, and the most common is to associate it with cryptocurrencies like Bitcoin or Ethereum and so on and so forth. There are thousands of such cryptocurrencies. So first thing first, are they related? Answer is yes, but are they same? Answer is no. Cryptocurrency is just one application of blockchain technology, whereas the potential of a blockchain is far beyond and much broader than just mere cryptocurrencies. So coming back to your question, what exactly is blockchain technology? Before I delve into what exactly blockchain is, Let us first understand how to understand technology. And this, what I'm going to talk in next 2 to 3 minutes, could be very relevant for any technology. When you are understanding a new technology, how should you understand or analyze those technology? The basic fundamental is to divide the technology into two layers. Let's take smartphone as a metaphor. We all have smartphones and mobile devices that we use. But how much do we know about the silicon chips that go into making of those smartphones? Or how much do we know about the electromagnetic waves that are the foundation of a mobile communication? Well, most of us do not know about these details because it is not necessary for us to know them. To use the smartphone, we don't need to know these details. So we mentally divide a technology into two parts. Things that we need to know in order for us to use the smartphone device, like its application side of it, and the things that we take it for granted, or even if we don't know those things, we can still use the technology. That is an implementation side. This implementation side is the technical internal of the technology. And for this session of the webinar that we have on a blockchain and taxation, we are focusing on the application side of the technology. We are not going into the technicals of how the blockchain works, what is nodes, what is hash technology, how the blockchain consensus mechanism work, and there are different types of consensus mechanism. That's very technical aspect. But here we are keeping it light. We want to understand how this could be applied for taxation purposes by drawing some inferences from a real world implementation of this technology in tax and non-tax. So that's the objective. With this background, let me now explain what is blockchain. There are many complicated definitions and explanation of blockchain, but the most easiest way to understand blockchain is to consider it like a database. It's just a database. It is a database that is shared across several participants in a network. These participants are computers. In technical term, in a blockchain world, it is called as nodes. But yeah, these are computers basically. The idea of a blockchain is that simultaneously each participant in the network would have identical copy of the database at any point in time, thus making blockchain decentralized as there is no central authority which controls the network. It is shared ledger or a distributed ledger as everyone has the identical copy of that database or a ledger in their computer. It is more transparent, and at the same time it is real time because the same copy of a data as the database is updated is available to everyone in the network. And these are also the key attributes of a blockchain. So this is broadly about blockchain. During the sessions, we will be talking about permission blockchain, permissionless blockchain. And just to briefly touch base upon it, let's not go too much into details of it, but a public blockchain is like a permissionless blockchain. For instance, Bitcoin blockchain, where anyone can participate in that network of a blockchain, permissionless blockchain, and everyone has the same rights. They can access, read, write, and audit. Whereas a permission blockchain is a bit private, closed blockchain. It could be private blockchain, or example could be a consortium blockchain, where there is one central authority or a person which governs the rule of the blockchain as to who should get the access and what type of access that individual or a particular network member or a participant should get. So this is what broadly the blockchain is. It is similar to database, but there are some innovation and attributes which are different from a normal database. That's the simplest way to understand blockchain.
And so I noticed that you have quite a few of these definitions neatly laid out within the paper as well, so that it goes into quite a bit in a really nice and structured way as well as you've presented it. But if there are, I appreciate there's so many more terms and terminology, abbreviations that are being used in this space. We probably don't have time to dive into all of them. What are the more key ones that you would say people have to know? What if from a user level?
I think understanding public and private blockchain is important because there are certain attributes of public blockchain which are typically not so optimal for private use, particularly for like multinational corporations or even for government to use public blockchain for certain data, because there are privacy issues. There could be certain data which is actually not shareable in a public domain and gets shared using a public blockchain. So one understanding of public blockchain and private or a consortium blockchain is an important terminology.
And what are the benefits of the tech? As in, like we said, isn't just the data. Is what makes this stand out?
Yeah, so you're right. It's a database. Then how does it matter? That why do we need this blockchain database if we already have database and cloud to store the data and share the data? But there are certain innovations which differentiates blockchain from a traditional database. And these differentiations or innovation make it more desirable technology to use for some specific applications. And the two most prominent differentiation factor or differentiating factor that comes to my mind is how the data is stored in a blockchain network as compared to a traditional database. In a traditional database, there is a central authority. It is a centralized database, whereas a blockchain is a distributed, decentralized database. So a typical risk of central database failing or a single point of a failure risk is completely eliminated in a blockchain, whereas it persists in a centralized traditional database. Even if a one computer in a blockchain network is corrupted or fails, identical copy of the same database is available across all the participants in the network, across all the computers. So practically, it is not so easy to fail like a blockchain network as compared to corrupt or fail a centralized database. Another important innovation that I think differentiates blockchain from traditional database is how the data is added to the database. In a blockchain, there is a concept of consensus mechanism. A block of a transaction in a blockchain network can be added only when a majority of the network participants verify and reach to a consensus to add that to the blockchain network. Whereas under a centralized database, there is a central authority which sets the rules and validates and confirms the transaction. So the power is in hand of one central institute, whereas in case of a blockchain, it is the majority which decides whether the data should be added to the blockchain or not. So these are the two innovations which differentiates blockchain from a traditional database.
And Sunny, what are the current uses of this technology? And before we go into taxation, what are the current uses before we even touch upon taxation outside of taxes?
Yeah. So if you see how the blockchain technology has developed, it's practically, if you see, it came into picture in 2009 when someone called Satoshi Nakamoto developed this Bitcoin blockchain, and that was actually starting point of a practical use case of a blockchain for some real world uh, cases. And that was in 2009 when the financial crisis happened. And till now, it's like 12 or 13-year-old technology. So it's quite nascent. It is not so matured. And businesses are still exploring practical application for tax and non-tax purposes. Currently, the most pervasive use of a blockchain is for cryptocurrencies. Apart from crypto, there are still some meaningful application of a blockchain. Like, for example, in a supply chain management, particularly in the food industry, to track the origin of a food from farm to the user journey. And for that, IBM has developed a technology called as IBM Food Trust Blockchain that traces the journey of a food product. So that's one practical example outside taxation. Second one can be found in a banking industry, particularly for cross-border payments, like Bank of Santander. They use Ripple technology, a kind of a blockchain technology, where using this technology, cross-border payments can be made on the same day or instantaneously at a very low cost. Another example is maintaining the healthcare record of the patients and that's particularly in the healthcare sector. Or in case of maintaining the property records or a property register. And there is a actual practical implementation of it in a state of Karnataka, one of the states in India, where they developed a property chain, a kind of a blockchain to record and maintain the registry of properties bought and sold in Karnataka state. And then there are certain other like contracts, smart contracts using blockchain for purpose of voting and so on. So there are real world practical use cases outside taxation, and it's not just a mere bubble as we typically use it for cryptocurrencies.
So there seems to be quite a few outside of this already. It's not something that is. Can you? And maybe this is a good time to transition into where it's actually, now that we know the use cases outside of taxation. Manel, I would not like to bring you in. Why do we need this technology within taxation? What benefits will it bring across over here? What are the potential use cases? And if you could tell us from a perspective of the stakeholders, either the taxpayers and tax administrations.
Yes, actually, when we think about blockchain, we should keep in mind, as explained by Sunny, that it's a shared ledger which stores the data in a way that it becomes immutable and makes it accessible real time to all the users in the blockchain, making the whole arrangement or the whole transaction highly transparent and secure. So how this can be used and useful for tax purposes, and which taxes can be concerned. Answering this question requires understanding the perspectives of both stakeholders, taxpayers, and tax administrations. Actually, as you said, Echo, we need to understand their needs and the potential benefits they can expect from the use of blockchain for their tax functions. So for taxpayers, blockchain, thanks to its features as previously outlined by Sunny, can eliminate duplication of efforts within a multinational group when it comes to recording intercompany transactions. Actually, with the shared ledger, intercompany transactions are recorded only once, and then they are shared with the other group companies which are involved in the same transaction, eliminating as such the duplication of effort typically faced in traditional business networks. Also, recording the transaction only once and making it accessible to all the parties involved in it using the blockchain helps increasing visibility and transparency, thus providing the management with a real-time and complete overview and control of their supply chain. Also, this kind of real-time transaction update that the blockchain technology allows us to have provides top management with quick and accurate insights into the company's tax position, thus allowing near real-time decision-making and faster actions. So also, if an intercompany transaction is recorded once and the same information is shared within the group, this will help also resolving data asymmetry and reducing the efforts of reconciliation, which is one of the major challenges that multinational groups face with transfer pricing particularly. So yes, and also last but not least, using, for example, a consortium or hybrid blockchain network could increase trust between tax administration and the taxpayers. Indeed, if we imagine a multinational group authorizing tax administration to access their blockchain network, which can be typically the case of a blockchain invoicing scheme, for example, in this case, we will have like one single immutable data, which is made accessible to the tax administration on a real-time basis. So it would build a confidence and trust between both and in the taxpayers' data, and may potentially reduce tax disputes. For tax administrations, blockchain can be used for sure to allow automation. I mean, paperless transactions, less human intervention, less mistakes also, and above all, real-time compliance and reporting, which is one of the main indicators of easiness of doing business in a given jurisdiction. So all this at the level of the administration increases visibility for tax administrations, as they currently do not have only the data given by a taxpayer in, say, VAT returns or in transfer pricing reports, but they will have a complete overview of the taxpayer's value chain beyond what it is disclosed in mandatory declarations. All this allows for the administration to conduct contemporaneous audits, notably by participating, as I explained before, in a consortium or hybrid blockchain network, where the administration and the taxpayer are both nodes, are both parties to this blockchain. So it will be a contemporaneous audit, immutable, based on immutable data and a real-time basis, thus allowing mitigating fraud. I would like to highlight some interesting input I found in a survey conducted by WTO in 2021 about the use of blockchain by customs authorities in a number of customs authorities worldwide, and the main benefits expected by those authorities from the introduction of blockchain. So the main benefits expected are mainly transparency, immutability, and accessibility of information. So 68 respondents means authorities out of 87 respondents, so around 80% believe that transparency, immutability, and accessibility is the main benefit. The second benefit, because they are ranked, is the fact that the fact of sharing information amongst all relevant stakeholders in real time. So 50 respondents out of 87, increased availability of information from different sources, 49 respondents, and automation through smart contracts also. So to come back to your question, Echo, about how can blockchain be applied to tax and which taxes can be covered. It can be applied by multinationals for invoicing and for recording transactions. It can be applied for different purposes and to different taxes, VAT, customs, transfer pricing. It can also be applied by tax administrations for tax filings, for tax audits, and also for tax collection. And by the way, lately, WEF, in a report published in 2021, they expect that governments can start collecting taxes using blockchain technology by 2023, 2025.
Wow, so it's interesting. It's something that is already in play. It's not something that is hypothetical of maybe we're looking far into the future and trying to figure out how to apply this. This is already technology that has been tried, tested, and already adding value to either the taxpayers or in particular the tax administrations. Can you give us some examples of countries, and maybe Sunny Manel, this is to both of you. Sunny, if you go first, who's already using it and how?
Yep.
Naming names.
Yeah, we can cover that. So when it comes to real world implementation, there are countries like Brazil and Argentina tax authorities. They implemented a blockchain based system to share the taxpayers' data with the different levels of tax agencies. So the state, federal, and municipal tax agencies, they share the taxpayers' data amongst them using a blockchain-based technology. So that's like a particular point solution for sharing of information on a real-time basis between different agencies of tax department. Another example is from when we were doing this research paper or a white paper on blockchain, we came across with a kind of a white paper written by Infosys, one of the technology giants in India, where they partnered with Indian tax department to develop an online income tax filing portal using a blockchain technology. They developed a permission blockchain technology where multiple participants, like you have custodials, you have banks, then there are various filings that are taking place within the income tax department. All data was used to pre-populate the information of the taxpayer in the income tax return. using the data that was shared on this permission blockchain by the various participants. So there is a practical use case even for filing the income tax return for the purpose of preparing the returns much faster, much easier, and rather than sharing the information on a point-to-point connection, they built a permission blockchain, and there all the data was shared. So these are like two examples when it comes to direct taxation and income taxes use case by the governments. But there are many private players as well, or a private sector that is investing significantly in developing blockchain technology. And again, during our research, we came across with 2 or 3 such examples. And one was by Ernst & Young, a giant tax and audit firm, and they are collaborating with SAP for developing a technology which is based on a blockchain for the purpose of intercompany accounting. And by that, they would want to they want to improve the visibility of entire data in an intercompany transaction, and at the same time solve the problem of data asymmetry, which is very common and prevalent in intercompany transactions where there are multiple ERP systems and the accounting done by one entity may not reflect the same accounting done in another entity. So all this asymmetry could be solved using what EY is working on with SAP to develop a transfer pricing related accounting process. And later in 2020, even Grant Thornton introduced a concept called as Inter.x, a blockchain-based technology, which again aims to make more visibility, bring more visibility, and solve the data asymmetry problem for intercompany transactions. So there are public as well as private sector that is investing and developing technology which could be used for tax and transfer pricing purposes. And I think this is just a starting point. It's just beginning of a journey. It's a long way to go. All these solutions currently are like point solution addressing 1 or 2 issues or problems. But over a period of time, I foresee this to become like a one ecosystem. And I will discuss about it later in the session. So yeah, these are the 2-3 examples of real world implementation of blockchain in a tax and transfer pricing field.
Amina, which ones have you seen? What applications have you seen? I think you were mentioning VAT and customs just earlier, a second ago. That these are the areas. Are there any specific other use cases from outside of these two?
So far, it's mainly VAT and customs. I would say we can mention China as an example because they implemented a blockchain invoicing system launched in 2020. They had a previous experience, but then it was developed further and launched in 2020. We have also Thailand and their blockchain-powered VAT refund for tourists, which was also launched in 2020. Also, we can mention India. The Indian Central Board of Indirect Taxes and Customs announced its plan to use blockchain technology to prevent GST evasion due largely to fake invoices and fraudulent input tax credit claims. I would say the major part of it is customs again. So it's used by tax authorities and particularly customs authorities. So referring again to the same study conducted by WTO in 2020 to assess use of blockchain by various customs authorities. According to this study, blockchain has captured the attention of the majority of customs authorities. So over a total number of 110 countries that were covered by this survey, 59% have plans to implement blockchain in their customs authorities. So among this 59%, only 2% fully deployed blockchain in customs authorities, which are Argentina and Uruguay. 19% are still exploring its potential through proof of concept, mainly European countries. And 14% still exploring the potential use of blockchain through pilot projects. And this is mainly Asia and Pacific and AMS region, Andorra, Monaco, and San Marino. The 26% left are planning to do so within the next 3 years. And these are countries in Europe, Asia Pacific, and the MENA region. 44 blockchains were tested in this survey, and 3/4 of them, so 33 blockchains, are private or permissioned, as explained earlier by Sunny. 9 are hybrid, and 2 are permissionless, public. So if we look at what the Kingdom of Saudi Arabia is doing now when it comes to introducing blockchain in customs authorities, the Customs Authority is exploring with other customs authorities and in other countries the adoption of a common blockchain platform that would accelerate customs clearance by exchanging customs declarations and declarations real time. Morocco also, the second example of our member states. The Moroccan Customs Authority has launched a cooperation project with DHL and GIZ to develop a blockchain platform to collect and share international transaction data on traders, express mail service, customs authorities, and other stakeholders. So as you can see, so far, the adoption of blockchain, correct me, Sunny, if I'm wrong, we have more administrations adopting blockchain more than multinational groups, I think, and it's more about customs than VAT, and potentially it will be applied for transfer pricing, more applied for transfer pricing also.
Yep. I completely agree with you that the trend is more towards indirect taxation, and rightly so, because the supply chain of the indirect taxation is such a big task to manage all the input tax credits and have the complete picture of the supply chain. It's quite common to use blockchain. That's the I would say, fit case for using blockchain indirect taxes particularly. But yes, gradually, as the technology evolves, it will be then used even for other aspects of taxation.
So in that sense, is it fair to say that the use cases are the benefits are multiple? You have different stakeholders that view the benefits of this technology. One of them is simplicity, as Manal was pointing out, that this simplifies a lot of the bookkeeping requirements for some multinationals, in particular, into reconciliation. But equally for the tax authorities, is it again, it's fair to say that they are also looking at it from a point of view of simplifying their ability to validate transactions as they happen, and dare I say, prevent certain nefarious practices such as fraud and evasion. And what can we expect in the future? Is it going to be a wider adoption, as discussed? What is it that we see that can? What do we have coming for us in this space? Sunny.
I think I'm just reiterating that blockchain is still in its infancy. So it's relatively new technology, hardly 13 year old. A lot to be experimented to identify practical use case. So a lot of discussions are needed. A lot of discussions like these are needed to actually evaluate, and a lot of white papers are needed. A lot of research work is needed to identify a practical use case for taxation, particularly in the field of international tax and direct tax, the use case of a blockchain technology. So I would say more discussions and then gradually wider adoption.
Do you see those discussions happening in a centralized way? Because what you've outlined just now is that there's a lot of activity happening in this space. There's countries that have gone into and applied the technology in different ways. Do you see that as being a harmonized approach at the moment, or are jurisdictions as well as stakeholders, are they taking their own separate paths?
I would say that it is still things are working in silos. It's not like a collaborative approach of developing something which could work cross-border or which could work even within the same country. So you have like in a real life example, if I have to give, like in India, even GST authorities, goods and service tax authorities, are now contemplating to develop a blockchain technology to prevent or detect tax frauds, GST frauds. So that's like working in silo where only GST authority is developing something that works for them. These are like point solution, but a more comprehensive and much more meaningful implementation of a blockchain would be, which I envision a big picture, is to have like a blockchain based tax ecosystem, which not only caters to a point solution, but which caters to the entire, or kind of reinvigorates the entire tax ecosystem, the traditional tax ecosystem that we have.
Can you, Sunny, are you able to talk a little bit more about how that would work, or what the vision would be there?
Yeah, I'll love to do this. But this with a word of a caution that this is my imagination, I would say, how I would want to see the technology to implement, with obviously certain practical like practical aspects why I think it is doable and why it should be done. So when we talk about this is like an ideal world scenario, what can happen in an ideal world using a blockchain in the field of a taxation? This requires reimagining the future and creating a whole new tax ecosystem, which is more robust, efficient, saves time and cost, it's easy to use, more transparent, and possibly prevents potential tax evasion. That's what would be like an ultimate ecosystem. But why? Then the question arises: why do we need this tax ecosystem? Isn't our existing tax system enough? As I mentioned, that these tax systems work in silos. So let's take an example. There are different portals. There is different applications. Like for instance, you file your VAT return on a VAT portal, and there is a compliance tool for VAT. Then there is an income tax portal, and you do all your compliances on income tax portal. Then there is a customs portal where all your customs data is captured, and there is a compliance which you do from a customs perspective. Apart from that, there are certain participants like your custodial maintains the information about the shares and funds that you have purchased or sold during the year. And there is bank which maintains the record about your financial transactions. So there are several multiple participants all revolving around one person. The taxpayer data is there with different participants. My vision is, why can't we create a kind of a consortium blockchain, a type of a permission blockchain, which kind of involves all these participants on one network, and these participants on a concurrent basis, on a real-time basis, share the taxpayers' information, so that there is more interoperability of a data between the tax agencies and other participants. And at the same time, it is real time rather than after the incident has taken place. So that would be the most ideal case scenario for me, to have an ecosystem based on a blockchain where we have a multiple participants. As I mentioned, there will be different agencies of tax department, the banker, the registrars, the custodials, all sharing the information of a taxpayer on one unified portal, and that would be based on a consortium blockchain. And then that data can be used for several purposes. One, taxpayers' return can be prepared on a real-time basis. You don't need to wait for 3-4 months to actually prepare the return. It will be pre-populated. It could be pre-populated as all the data is there in the network. Second, the possibility of tax fraud is minimized because you're getting the data from all possible legal sources. So the possibility of missing out any income from assessment, or possibility of underreporting or evading any taxes, is completely ironed out. And at the same time, the system becomes transparent. It is transparent, it is accessible to all the participants. You can define the permission rights. But this would be like an ideal world scenario for me, to develop a whole new tax ecosystem running on a blockchain.
One very quick question for me on this. What are the, and I'm sorry to ask, what are the roadblocks to get us there? What do you see as the hurdles before we can get to an ideal system like that?
I think the biggest hurdle would be to have someone with a big vision. You need to have a big vision to have this kind of a project. And I'm not saying that you just jump and directly do something big. I think what the world is doing right now, adopting technology for smaller point solution, that's the right way to test the technology. And once the potential of the technology is known, then it would be a right time to scale it up and have some larger projects like the one I told. So first is having that large or a big vision is essential. And the second is there are multiple participants involved. So consensus of all the participants to be part of this blockchain is also important. So these are the two practical hurdles. I think one is there in our mind. We need to be a bit open to this technology, not just correlate it with crypto and just shun it off that, okay, blockchain, it is just crypto. We can't use it. That attitude has to change. And the second is consensus of participants.
At this point, Sonny, I have to raise my hand and say that I was definitely guilty of that. If you asked me this question a year ago, I would have been definitely very dismissive and said, "No, it's crypto." But nowadays, having been unable to ignore this topic any longer, I've had to jump back in and certainly educate myself a little bit more in the space, which has opened my eyes to the world of possibilities of the use of this technology within this area. But now, what about from your perspective? I'm just conscious of our time, and I want to make sure that we leave enough time for questions as well that we've received. What's your view on the ideal state? What are the benefits?
Yes.
I'm so sorry. I just lost you for there was some internet connectivity issue at my end, so I couldn't hear your last point. But
Yeah, you're fine, Sunny.
all right.
So again, about the limitations of blockchain, there are many, but related, I would say, to the cost advantage of developing and implementing blockchain, particularly in low capacity administrations. We can also think about low capacity in certain tax administrations, not only in terms of financials, but also in terms of human capacity. And again, the problem is with developing countries and low capacity administrations. We can think also about sovereignty and rule of law. Actually, the use of blockchain should be based on clear laws that delineate the function of algorithms and data and prescribes clear rules and procedures for the use of the technology. I would say there should be a comprehensive legally binding framework governing the design, the development, and the use of the blockchain, including standards for application, procedures, methodologies, credibility, information security. It should cover all the aspects related to the use and to the development and use of blockchain. Referring again to the same survey conducted by WTO in 2021 about the use of blockchain by customs authorities, and what could be the limitations actually of this. I would say 6 main limitations were identified. The lack of standardized data set used by government agencies is the first limitation. More than half of the respondents are really worried about this. The complexity in establishing an inclusive but efficient governance mechanism also. The lack of a standardized data set used by economic operators within the supply chain. The use of different types of blockchain technologies and the lack of interoperability between them. And also the lack of harmonized regulatory procedures in different countries. Last but not least, the incompatible legal requirements in different countries.
And I can ask you another question, and I've got a few of these towards the. Hopefully, you can hear me.
Yeah, I can.
In the challenges, of course, administrations have been trying to move towards technology, have been trying to apply technology in different ways. One of the areas where I'm quite familiar with is on the invoicing side, particularly some call it digital reporting, others call it continuous transaction controls. Some refer to it as e-invoicing as a general bracket, but it has a lot of names. We really need to settle down on one. This area, how does that interact with blockchain?
With blockchain invoicing.
Yeah, blockchain invoicing and what we see today as e-invoicing and blockchain. And what is there any what's the overlap, or is this completely two ships passing, and is it something similar there? Can you talk about that for a moment?
Yes, actually, this is one of the frequent questions asked. What's the difference between blockchain invoicing and e-invoicing? I would say they both allow to perform the same functions related to on-chain invoice delivery, inspection and approval by the billing parties, along with the invoice storage and reimbursement by the recipients. These are functions that e-invoicing can also perform, that both blockchain invoicing and e-invoicing can perform. Similarly, of course, it's a paperless tax management, which is not new to invoicing software users. I would say e-invoicing can perform 90% of the functions that users achieve also using a blockchain invoicing. However, there's still some advantage that blockchain technology can offer when it comes to invoicing, and these are mostly related to, I would say, tax supervision. Actually, blockchain makes it possible, for example, to track delivery of goods. That's making sure that the transaction is an actual one, as opposed to invoicing, which does not allow this function. You only see an invoice issued, you can track the output, input, VAT, and so on, but the transaction could be a fake one, actually.
So to paraphrase, while the two are similar, there are still on the blockchain, there are still some additional things which traditional, let's put it this way, traditional or modern current day digital transaction reporting isn't there. Do you see, because a lot of governments are on this journey right now, a lot of tax administrations are on a journey to implement this. Do you see some of them pivoting and changing course to try and amend what they're currently doing? Do you think that some countries might be able to leapfrog and go into a new type of technology, move into this blockchain area rather than having an iterative process of having to let's say, the more mature governments have gone through today, having them leapfrog into this new type of technology to use that? Do you see that happening?
Yeah, I see. I would say it's rather a general move, a global move now. So yes, I see it happening in many European countries. I see it happening also in some of the MENA region countries, because they are quite advanced in customs authorities and any other blockchain functionality when it comes to indirect taxes or direct taxes. It will come soon for sure.
Got it. And if you don't mind, I did receive a couple of questions from our side. If I may ask some of them. Digital identity and blockchain as in, I think, Sunny, you and I were talking about tax administration 3.0 and the role of the governments here, and one of the objectives there is digital identity. Is there any interplay between these two topics and blockchain? And should governments be sort of looking into this direction? And
I would say that, yeah. I think currently, if you see that there are multiple identities with different agency, you have a different identities. You have your VAT registration number, you have your income tax registration number, and then you have customs registration number, you have bank account, you have your company incorporation number, you have custodial number, and so on and so forth. So you have multiple identities, a same person. I'm not saying multiple identity of a same person. It's like a multiple identification number issued by different authorities to a same payer, taxpayer. So under a blockchain, there could be like a master identity, which could be like a universal identification number, and that could be used for all the compliances. So that's, I would say, more typical practical way of looking at identity and blockchain. from a practical use case perspective.
And another question for me, make it easier and more tangible for me to understand, and maybe some of some participants on the call. If we had to compare this technology to something that you've seen before, let's say that this has been hailed as one of the revolutionary technologies taking shape today. Let's say compare it to the internet. Where are we? If you had to compare this to the internet, which year are we in right now? Are we at the early 90s? Are we 2007? Is it the iPhone stage yet, or where are we?
Certainly not the
Depends on the
iPhone.
country, I would say.
It's not an iPhone moment for us right now, like in a blockchain world. But certainly, yes, we are somewhere in the late 90s and early 2000 of the internet era, where it was just a upcoming technology. And this is, I would say, is same with blockchain. I would say it has taken more time as compared to internet because predominantly the focus was on cryptocurrencies. But now gradually people are shifting focus from crypto and identifying its use case for other practical and business cases as well.
Excellent. And Manal, Sunny, before wrapping up, last question. Any closing remarks? If you were going to say to our audience today, what should they be taking? What are the things that you want them to take away from this discussion? What's your one tip? Any specific pieces of advice? Manal, to you first.
I would say that tax administration 3.0 is a reality today, and the use of blockchain for tax purposes is really expanding, as we discussed earlier. And the proliferation of blockchain solutions that are interconnected is a major limitation to building scalable systems. So I would say that a wide collaboration and cooperation between tax authorities is required. We at DCO, we're keen on providing added value to our member states by building capacity in their tax administrations, including increasing technology use and innovation. So I would also say at the end of this webinar that at DCO, our approach is multilateral and inclusive, and our initiatives are open to all stakeholders, academia, professionals, governments of our member states and non-member states, as well as other organizations. So we're working on, we should be ready to the change, and we should endeavor not to leave anyone behind. Last thing, Echo, if you allow me, if I may, I would like to say that DCO is, and this is a marketing thing, is launching a series of webinars during 2023 covering topics, cutting edge and innovative topics, I would say, about tax and technology in general. And I would invite our audience to stay tuned, to follow us, and we're welcoming any suggestions, if any, and we value any participation. Thank you very much.
Thank you, Manal. And Sunny, any last closing thoughts or takeaways for the audience?
Yeah, bit on a critical side of the blockchain. We need to understand that it's not that blockchain is fit for all the use cases. We need to realize that. It's not something which will solve all the problems. It is a good technology, but at the same time, we need to experiment it a bit. So when you're evaluating a blockchain for any tax or a non-tax purpose, there are certain preconditions that you should keep in mind when you're evaluating the use case of a blockchain. One is that typically you need to see, are there multiple parties or participants involved in a particular transaction or a leg of a transaction or for a particular use case? If there is, then it makes more sense to use blockchain, because instead of sharing point-to-point sharing of a data, you can have a blockchain where the data could be stored and shared in a decentralized way. Second is you need to see how the data is it fragmented? This there is no structured data, it is very fragmented across various participants. If that is the case, you need to link the dots, connect those fragmented data using a blockchain. There's a good case for using a blockchain technology. And the third one could be where there is a trust issue, particularly that you really don't trust one source of information. You need multiple sources, and same need to be verified across the sources. So there's a trust issue, and you want to solve that trust issue using a blockchain. So these are some preconditions, not the only, but some critical ones when you are evaluating a blockchain technology for a particular use case, be it tax or non-tax. That's my closing remark from my side.
Thank you, Sunny. And to wrap it up, here's my takeaway, and something that I certainly learned today, that I'm familiar with technology having shaped and changed our lives, and continues to shape and change our lives, whether how we book a cab, how we book accommodation, how we pay for it at the end of the day. And what my takeaway was historically is that this is something that changes for the multinational enterprises. And the tax arena is absolutely no exception to any of this change. And particularly what's new for me is that tax administrations are not, in this particular space, they're not the ones that are trying to fall behind. They're the ones that's setting the pace in this area. And what you mentioned, what you both mentioned earlier, it is great to keep on top of the discussions in this space and to engage in the debate now. I was going to say early, but I don't feel it's early anymore. I think this is I think we're already, as you said, if we're in the late 90s, you should start discussing things now. And with that remark, I would certainly look forward to future sessions from the DCO. I look forward to people dialing in. I'd like to thank the DCO for hosting today's discussion, and of course to the panelists, Manuel and Sunny, for the insights into this topic that is still new to so many of us, but it's going to become only more important as time progresses. And finally, thank you to all of you who have dialed in and for allocating a portion of your time to listen to the views shared today. I hope to also see you in the future discussions from the DCO. Thank you very much.
Thank you.
Thank you so much.
Bye.